Dear friends, welcome to Shasha's virtual classroom. So today we'll discuss activity 2.1. So this is David Hopkins' latest book, latest textbook. So we'll start. So below are the financial transactions for Max Business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat. It is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So basically we need to know the personal account. The personal account. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales returns. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, write always the heading. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So the thing, if they have debited, then no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always date, you have to write always date, always currency, so what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students, they get confused again here. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what one should be debited, the other account will be credited. So this is very important. So next, coming to the next, sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account, Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd, 300. October 2nd, so it is always credit, this side is always debit. So how much? 300. See, sales is a revenue. Sales is always credited. Credit all incomes and gains. Sale is always credited. Sale account is credited by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules in accounts. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Okay, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. So nominal accounts expenses they write off as an expense. Income account they write off. A revenue account they also write. Assets account debit what comes in, credit what goes out. That also they write. But in personal account they mess up. They get confused. They think from the point of view of max business, but they try to think what max is doing, whether max is giving, max is receiving, or something like that. No, actually you have to see what Tina, who was what position is in Tina. So Tina gives, Ali receives. So this is very important. Okay, now it has been clear to you. So now it is, everything is easy. So then the entry is complete. So next, so sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited to 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200 with on what date? On 4th October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So purchase returns. So purchase returns. We have to open one account called purchase returns. This side is always debit. This side is always credit. Always in dollars. Always in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. So we have to credit 200. So this is how you have to remember. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. We have to credit purchase returns with 200 with a debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important, so that the logical flow of concepts is very clear. Okay, so very clear. Logical flow of concepts is very clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is the Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there, so we have to just write there. Purchases account is already there, we have to write there 2400. What date? Date is very important. 8th. 8th. From whom? From Lim, isn't it? Yes, Lim. So you have to write Lim. So purchase account is debited with Lim. Purchase account is debited with a credit to Lim, and Lim account will be credited. What is Lim account? We have to prepare Lim account. Lim account. We have to create it. So October 8th, 2400. So why are we creating limb? Because we purchased from him. Understood? This is how it is. This is how you have to understand the concepts. Very clear, very clear. Now it should be crystal clear to you. Now let us move forward. So then sold goods to Omer for 1100. Sold goods to Omer. So when we sell, obviously Omer will receive. So Omer is the receiver. Account Omer receives. Omer receives. So Omer receives. So Omer account will be debited. Debit the account that receives, right? So Omer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Omer account and we have to write in sales account. So Omer account and sales account. Omer account. Omer account. So Omer account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Omer account is debited. Why? Because we have sold in sales. Sales. Omer account is debited with sales 1100. So now Omer account is debited, sales account is already there. So a sales account we have to write now. We have to write it in sales. Omer account, October 8. Omer account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have returned. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10th. Purchase returns Tina 100. Purchase returns Tina purchase returns Tina. Where is Tina? Purchase returns Tina 100. So why we have debited? Purchase returns. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. So one more account, sales returns. Sales returns account. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount should be here and it is on 11th, October 11th. And what is the amount? Sold to Ali 300. So you have to write 300. Ali 300, sales returns 300. So there is no more. So he has returned everything. So sales returns account 300. We have to debit Ali. Sales return account will be debited with Ali's account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below are the financial transactions for pen's business. Post the transactions through the ledger account. All goods are bought and sold on credit. Bought goods prompting that cost 5,000 less trade discount of 15%. So sold goods to leave for 1,000. So return goods costing 500 less discount to Ting. So purchase from V that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money owed. Paid V for goods bought on 15 November. Received full payment from V. So what you can do, you can try working out this question on your own, and in the next class you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day.